Good morning. Today's video is about the new IRS payment plan released in March 2020. Alright, so March 2020, the IRS came out with a new IRS payment plan that did not exist before. This payment plan is for people that owe less than $250,000, and it allows them to go on a payment plan without going through financials. The terms of this, or I guess the proper title of this, is a Non-Streamlined Installment Agreement, or NSIA is what we call it here. The Non-Streamlined Installment Agreement allows you to enter a payment plan without going through financials if you owe less than $250,000. Previously to this, we had an 84-month test going on that the IRS rolled out for a couple years that they were kind of seeing if a streamlined payment plan would work for people that owed less than $250,000 if they could pay it off in 84 months. But since March 2020, this new plan has rolled out and is working pretty well. Now, it's very similar to a streamlined, however, the caveat is that a tax lien will be filed. And so remember, if you owe less than $50,000, going on a streamlined payment plan is still better. Tax liens are not your friends. There's less criteria for a streamlined payment plan, so that's the one to go for if you owe less than $50,000. However, if you owe more than $50,000 and less than $250,000, the non-streamlined installment agreement is a great option. Now, we've talked about this before. Taxes do expire, all right? They have a collection statute expiration date. And for this type of payment plan, the only terms of it is that you have to pay the whole taxes off before that collection date expires, right? That's it. So as long as you're making monthly payments and you're paying all of the taxes, principal, interest, penalties before it expires, the IRS will approve this. You have to be an individual tax debtor. You can't be a business. You cannot be with a revenue officer yet, so make sure that hasn't happened yet. And you have to pay through direct debit or payroll deduction. As long as those criteria are met and you're paying this thing in full, then you're going to be approved for this new payment plan. What's the most important part about this is people that have that much tax debt probably made pretty good money. And usually if you make pretty good money, you have assets. Your assets are protected during this type of payment plan. You do not have to disclose what assets you have. You don't have to disclose your income or expenses either, but you get to protect your assets. You don't have to sell anything. If you have a revenue officer, they want to go after your assets. Their goal is to pay this thing off as quickly as possible. And so if you do have a revenue officer, be careful. But if you don't yet have one, consider this as a viable option to protect your belongings. Now, to consider this and all your other options, please give us a call here, 800-822-4122, or go to our website, taxdebtservices.com. Thanks.